Hey guys, Steve Palise here. The pandemic has highlighted the need for high quality healthcare, meaning the government and Australians are spending more on their health than ever before. But unfortunately, so many areas across Australia are just not coming close to meeting the demand when it comes to providing premises for this industry. Coupled with an ageing population and an increase in chronic health-related issues, you've got a pretty strong case for investing in healthcare properties. And these are just some of the reasons why it might be a smart investment for you. Medical real estate investing is known to provide a consistent and strong return, and generally perform well regardless of the economic circumstances. So, with all these benefits of investing in medical properties, what are some of the considerations you need to keep in mind before diving in? Well, let's have a look. In terms of location, medical properties can be located in retail or office locations, depending on the target market. Generalist medical facilities such as GP clinics and dentists will often want to be near complementary businesses such as pharmacies, X-ray facilities, and some will want street and road exposure to encourage business. There will be much more of a classic retail investment with high foot and road traffic. On the other hand, office-style medical facilities are generally leased by specialist professionals who have appointment-based businesses where foot traffic is not as important. They are also more likely to be in a building with other medical professionals. But unlike ordinary retail properties, medical facilities can be in suburban areas and still be stable. You'll need to make sure though that there isn't an oversupply of other medical zoned buildings in the area. For example, if you're purchasing a GP clinic, you should see what other medical zoning properties are out there that could become the competition. When it comes to price points for these investments, medical properties can cost as little as $300,000 for a small office suite, all the way up to tens of millions of dollars for large freestanding purpose-built medical centres. Whatever your budget, one thing to understand is that yields are often lower for medical centres because people pay more for medical tenants versus other types due to the low-risk nature of them. And then, in terms of what you can expect from the type of building you need to invest in, the medical sector has unique requirements, like additional plumbing and wiring to allow for medical room fit-outs, which makes the cost of construction and fit-out much higher than a conventional retail space. Having said that though, the more expensive the fit-out, the less likely the tenant is going to want to leave that location. For example, a dentist might have a fit-out worth hundreds of thousands of dollars, which means they need to stay put in that location for many years to justify that expensive initial fit-out. I also mentioned earlier in the video that medical businesses tend to be recession-proof because there's always a need for medical care, but this isn't necessarily foolproof. Anything can change these circumstances. For example, think about how technology has developed and changed other sectors. Self-diagnosing equipment continues to advance, and a shift towards virtual assessment or telehealth appointments may have been accelerated by the COVID-19 pandemic restrictions on in-person contact. For the most part though, at the moment, these properties are usually very profitable and tenants are stable, with good long-term prospects. They have loyal customers and patients and service large areas. Business owners will often do joint ventures with other medical professionals, such as pathologists in the same building, which makes them trustworthy from the bank's point of view because there are essentially multiple stable businesses involved. So, despite all the considerations, for investors who are looking to get into one of the lower risk commercial real estate spaces, you might want to consider healthcare, especially with the demand only set to skyrocket with our aging population. Anyway, I hope you found some thought-provoking considerations in this video. If you did, make sure to like and subscribe for more commercial property content. You can also download a free copy of my due diligence checklist from my website, www.paliseproperty.com. It could be very helpful if you're looking to get your foot into the commercial property door. I'm Steve Palise, author of Commercial Property Investing Explained Simply. See you next time.